Hello, good morning, viewer. Thank you for returning to my channel, Hocantalk. Today, this video, I'm going to talk to you about a macro topic, a bigger topic. Now, as you know, we have been living in the economy. So this video is going to introduce a very popular question asked by many of my friends. They always ask me, where does all the money in the economy come from? So as an ex-central banker, ex-investment banker, ex-private banker, ex-fund manager, I think I would like to make this video to introduce to everybody how the economy work under monetary flow, meaning how money is being created, how money is being injected into the economy, how the money multiply, go into everybody's pockets, go to corporates, balance sheet, P&L, and then roll back into bank and it keep rotating in the system. Okay, so today's topic is a very interesting and relevant topic to everybody, and it will be useful to your career to have this knowledge. So please do subscribe to my video, and I will produce more wonderful video to enrich your knowledge. Now, okay, let's zoom in. Again, same thing. This video will be produced in both languages. It will be English and Chinese, and you'll be using pen and marker and paper. And let's drive in. Now, the topic of today's video is how money is created. In Chinese is 钱是怎么产生的? The money that in your wallet, in your bank deposit account, where does it come from? Now, let me do an illustration. Now, all the country in the world, they go through the same pattern. So I will explain it. But again, the illustration will be very brief, but I will explain it in wording. So if you look at the slide, now, of course, the first thing that how money is being created is through the government. The government working with Ministry of Finance of the respective country, they will decide how much fiscal money to print. So for example, if they think that they have to print some dollars and also produce some coin, then they will start printing. They will pass a resolution. They will pass an agreement after the meeting for monetary policy. They will start printing the money. So the first thing always, the first batch of money creation is always through printing of dollars and coin and production of coin. So when they have this fiscal dollar, at a later stage, I'll tell you how much money has been printed so far globally. Now, this money will be given to the deposit into the central bank. So the cash printed will be given to the central bank. So in Singapore, it will be MAS, in China, PBOC, in the USA, it's called Federal Reserve, in Japan, it's called Bank of Japan. Now, the fiscal money will go to this bank, and this bank will do a digital entry into their book ledger. So they will put out there deposit from government, or whether is it pay up capital or whatever format they want to record on their balance sheet. And the money they will put into the safe to meet transactional demand. For example, someone need to carry cash. Later, all this cash will be distributed to all the commercial bank in the system or within the country. So if you look at the slide, once a central bank get it, they will pump the money as a deposit, just like you deposit money into a bank. Central bank will deposit the money in commercial bank, and then commercial bank will be the conduit to channel the money through loans, through whatever usage, to lending, to many areas. Like, for example, they will lend money to individual, they will lend money to corporates. Corporate will use the money to do business, generate profit. Corporate will pay salary to the individual. Individual will put the money back into the bank as a saving deposit account. And of course, the central bank can also inject this cash into the market, into the economy by buying financial asset. For example, if a bank A issue a IOU notes and the central bank buy the notes, they are effectively transferring the digital format of the fiscal cash. Why I say digital format? Because when you put the money into central bank only record on their accounting as X amount of money available for lending. So the money will be channeled through into the system by buying IOU asset issued by someone else, issued by borrowers. And it also can be inject into the banking system through increasing or reducing the reserve ratio, which this is a little bit technical. I will more or less highlight in more details now. Now, in order to make sure banks are financially stable and prudent, all the central bank in the world will ask the a commercial bank to put certain money with the central bank as a safeguard to make sure that the bank do not overly lend out the money or overly expand based on leverage. So if under Bank of for International Settlement, the requirement is 8%, then it's 12%. There's two thresholds. So minimum you got to maintain an 8% capital adequacy ratio, capital adequacy ratio. But again, central bank can say that for every $1 that you lend your money out, you must have at least 10 cents with me. So that's called a reserve ratio of 10%. And if the central bank increase the reserve ratio, then it will reduce the capability of the commercial bank to lend out money. If the central bank reduce the reserve ratio, then it will increase the capability of the commercial bank to lend out money. But increasing the capability doesn't mean increasing the willingness. Whether a commercial bank want to lend the money out and take this kind of risk and earn the interest income depend on market condition. Okay, so I give a very simple explanation about how fiscal money after printed being flow into the system and through lending credit, meaning the bank start to lend money out, and the same $1 being produced or printed will circulate in the economy many times. So the bank will give money, will lend money to corporate will do business and then pay salary to individual get the salary, spend some, and then put some saving back into the bank, and then the bank use saving to lend to corporate again. So money flow one round. So the more rounds of money circulated, the total amount of monetary flow in the economy will increase. Now, there are actually two types of money currently being used in the world. The one that in your wallet now, or the one that you put in your bank deposit that earn interest and all the one that you use to transact is called fiat money. Fiat money in economic terms. Fiat meaning that this money has a value because the country, respective government in the world recognize it and give them the legal power, legal tender to be recognized as something valuable. So if the note says $1 Sing, that is worth $1 Sing. So again, this is called fiat money, meaning the value of the paper and coin, the nickel that you have inside your wallet, inside your bank account, they have value not because they themselves are valuable, it's because the legal system of a country recognize or that this X amount of money is worth X amount of money. Now there are another type of money called commodity money. Now a lot of these commodity are not legal tender, meaning that it's not recognized by law, but recognized by market forces. Some of them like gold, silver, precious metals. Sometimes you see people do barter trade using rice and then they exchange for flour. As far as both parties recognize the value of commodity money, then a transaction can be fulfilled. But again, whether the commodity money is being recognized by a country, that is a separate issue. So say it's a separate, totally separate thing. But you still see people buy things or sell things using exchange of fiscal commodity. So for example, last time during wartime, people can exchange oil for water, food product for silver or gold. But again, these are not really considered a legal tender that allowed to be freely circulated in the market. But again, today our topic will be more on fiat money, those legal money. Now, just like I explained how money is being created. The first step is money has been printed, has to be printed. So after printed, the government will not bring this hard cash to the commercial bank. They will bring it to their own central bank. The central bank will record them on the balance sheet and start to pump this money out to commercial bank. And the commercial bank in the world will start to lend this money over and over and over and over again. Meaning they will, once the money come one round back to the bank as a deposit, they will lend it out again. So it's keep going round and round and round. So $1 printed can be used more than 100 times, 200 times, 300 times. So that's where the money in the world come from. Now, you look at this slide, 95% of the money in the world come from credit, meaning come from lending. The bank lend money out, so they actually create more money on the physical cash that is printed by the government many years ago, or consistently government will print new money and inject into the economy. So 95% of the money circulating in the economy right now from a global perspective, they are created by commercial lending from commercial bank. Only about 5% are those cash that actually printed by respective governments. So the whole world, the general figure is about 95% from credit, from debt, from lending, and then 5% from actual cash printed. Now, the factors affecting the money supply. So you all will ask what affect the increase in money and reduce in money supply in the company. Sometimes you can see that, hey, like as if money not enough. Now, why? We all got to link to the factors that will affect the willingness to lend, meaning the credits. So the bank as a conduit, as a system to re-channel the money flow back into the economy, are the main party involved to decide how fast or how much this money is being reused in the system. So when banks start to think whether they want to lend money, they will look at a few factors. First, they will look at the interest rate. What is the future reading of the interest rate? Is it profitable to lend money out? Because bank also need to borrow the money from the market, what we call the money market or another bank, so that they have money to lend out, because the bank will receive money from two ways. One is a deposit put in by individual or corporates. One is their own borrowing from central bank or from other bank or from the market. Oh, so the second thing, like what I mentioned, is the bank reserve requirement. So the central bank can increase the reserve or reduce the reserve. The reserve means that every $1 you lend out, you got to put 10 cents with the central bank. So using this reserve ratio, the central bank can control the capability of the bank to lend money out. But again, I want to stress, the capability to lend out and the willingness to lend out are totally different things. So the final factor to affect the willingness of the bank to lend out will be the market condition. If the bank think that the market is bad, or there's property bubble, there's a high likelihood that the money lent out will not be able to be recovered, then they will not lend so much, or they only lend to those company or individual that they think can repay. Now, some of the key concepts, there are many formulas about monetary flow in economics, master degree and degree. I will skip all these because that will take a few months to explain. There are multiple, a lot of economists will come out with their own formula, but I will stick to the very basic one for this video, so at least you have the very good foundation of understanding. Now, again, the key concept here, there are only two. It's called the propensity to consume. In Chinese, it's called 消费倾向, or propensity to save. How much money you want to save. So assuming you as an individual, you work $1, you receive $1 as salary, how much of that amount of money you are willing to spend, and how much amount of that money you are willing to save. But saving is also a form of investment, because you actually invest as deposit in the bank. So these are the two concepts that actually decide how fast the money roll in the economy. Okay, so this propensity to consume and propensity to save decide the velocity, the speed of the money spending within the economy. Now, the how many times it can go. Now, to come down to the very simple formula, all the economists in the world, they actually fine-tune the propensity to consume, they say, into what we call a marginal propensity to consume. In Chinese, it's called 边际消费倾向, meaning if you have $1 increase in your income, how much are you going to spend? So it's the changes, it's a percentage that count. Just now is an absolute number. This is a percentage. Likewise, they will also calculate another thing called the marginal propensity to save or invest. It's the same like a propensity to save, but this one is on the incremental. For example, if your salary increased by $1, how much are you going to spend or how much are you going to save? So after knowing all these basic concept, the basic is called propensity to consume or propensity to save, and the economists will always come out with a formula. So the marginal propensity to consume is MPC equal to change in the consumption and change in the income. So if you have $1 increase in income and you're going to spend 50% of that income and then save 50%, then your MPC will be equal to 0.5, will be equal to 0.5. Or it's a very simple concept. So MPC plus MPS will be equal to 1. So like, because you can't spend more than what you have. Now the propensity to save, the formula is change in saving divided by change in income. So $1 additional income that you receive, if you decided to spend 50%, then definitely the rest of the 50% you have to save it in the bank or invest somewhere. You cannot keep below your under your pillow. If you keep under your pillow, it also consider propensity to save, but that dollar didn't go back into the system, so that is considered leakages. There are some leakages. You put it behind your pillow, you put it inside your cabinet, and you don't put it back into the system. That is called a leakages. But not many people do that. A lot of people will put back into the bank. Bank use your money, and then they'll start lending again. So you keep going one round and one round and one round. Now, so economists come up with a very commonly used thing. It's called the multiplier. 天线 multiplier is called 肯乃斯乘数, meaning that how fast or how many times the same $1 increase in income will be used to turn around in the economy. So they call this the multiplier effect. So in this case, like I mentioned just now, MPC plus MPS is equal to 1. So if you spend half of the money, that means you allow the money to roll over 2 times. Everybody in the world, like this person send half, then you send to the other person, the other save half, spend half, keep going round. If you use this formula, 1 divided by MPS, then you get 2 times. So if you save half, it's 2 times. If you save 20%, then the money will go 5 times. 5 times. If you save 10%, the same $1 money, if everybody in the society save only 10% and use 90%, then that same $1 will go 10 times. Will go 10 times. Okay? Now you see the picture. It's very simple. The lower you save, the more times the money will be channeled in the economy and make the economy more vibrant. But again, I'm not saying that low saving is good, okay? Not saying that. But this is how economists use to calculate monetary flow, how much money is flowing in the economy. Okay, now, again, since there are factors affecting bank in lending, there are also factors affecting the marginal propensity to consume or marginal propensity to save. So if imagine you are the individual, before you spend your money, you will always ask, what's the interest rate? Do I keep the money into the bank and earn interest, or do I spend now? So also interest rate will impact the decision made by corporates or individual whether to consume or to save. The credits, meaning that are you able to access to someone who is willing to lend you money, for example, bank. So if you think that someone is able to lend you money and ask for the repayment to be later, then you will spend more because you have more money. Some people operate this way like credit card. So if they have a lot of credit card balance, they will spend more. So these are the factors. Number 3 will be the income level. So if you earn a lot of money, the general rule is you will spend more. If you earn less money, the general rule is you will spend less. But again, I want to caution one thing. If you earn a lot of money, the percentage of your spending vis-a-vis the saving will be lower compared to those people who earn less. Because there are something like necessity, like eating, food, clothing, you have to spend. So beyond that, a luxurious product, the poor people will not be able to spend. But those necessity spending already occupied a lot of their saving. So generally, for low income person, the marginal propensity to consume, meaning the willingness to spend, is higher than saving, definitely. For rich people, They do spend more in absolute term, but in percentage term, they save more than they spend. Now, of course, the last one will be market condition. If everybody is gloomy, people worry about job, whether they can keep the job, then they will spend less. If people think that they can get promotion, increment easily, then they will spend more. So if we look at the kind of different income level, generally globally, how much money are they willing to spend? So like I mentioned, for those people who earn are below to the low income level in the country, the most likely they will spend 90% of their income. Every $1 they make, they'll spend 90 cents. For the middle income, they will spend about 70%. No, for the rich one, they will spend only about 40%. They will save 60% because their absolute amount is bigger. So how much money you don't need, you don't eat much more, a lot more, despite the fact they got higher income. So in terms of percentage wise, for rich people, they only spend 40%. That is not enough to meet their daily expenditure. So they save 60%. Again, the higher the saving ratio means that the slower the money will roll over in the economy. So let's look at globally, which are the 10 top banks that are the engine to rechannel this money back to the industry. Now, I want to caution that this top 10 bank does not include any Chinese bank from China, because China has currency control. So when they have currency control, you don't have a lot of renminbi floating in the open market. I've actually produced two videos on what is the difference between the renminbi used in China and renminbi used outside of China. So if you're interested, you can take a look at those videos. But for this one, because of currency control, those actual needs of transactional needs of Chinese importer or exporter, or when they flow outside of China, it will be converted into the international currency, which is US dollar. That's why if you look at the banks that generate as an engine to rechannel the money back into the system, are mainly the Western banks. So I list down the top banks now in the global market. For example, JP Morgan, Goldman Sachs, Citibank, Bank of America, HSBC, the Paris Paribas, the French bank, Deutsche Bank from Germany, UBS from Switzerland, Credit Suisse. This one has closed down. The Credit Suisse and UBS has merged, and Mitsubishi Bank. Now, of course, of all these, I've worked in a few of them. So there's a lot of them are my ex-employer. Okay, now the last slide, I just want to give you an overall view, overall view in the whole world. Now, how much money are there in the whole world? So now, total economists always use how liquid the money is to classify how much money is being circulated in the whole world. So they use the word called M0, very liquid, M1, slightly less liquid, M2 middle, and then M3 is including all those things that is liquid but not as liquid as cash. Now, what does M1 include? M1 right now globally for 2026 January figure, if you look at all the, you look at World Bank, you look at IMF, the figure published by them, the total cash printed by all the country in the world is about 9 trillion US, 9 trillion, all the country in the world. Okay, the money printed and then they put into a central bank as a deposit. These are considered the MO. So it's about 9 trillion in the world. Now, what about M1? M1 meaning a lot of people put money into a current account, meaning it's not a deposit, so they can use it anytime, so it's very liquid. So, but again, this our current account balance is being rolled over many times in the industry, so it's definitely bigger than M0. So M1 is equal to M0 plus all the current account balances in all the bank in the world. So it's about 50 trillion, 50 trillion. So as you can see, from MO to M1, the money actually flow 5 times already, from 9 to 50, 5 times already. Now M2 including short-term deposit. So if you put a deposit 1 week, 1 month, 2 months, this is considered short-term deposit. So within that period, you cannot use your money. So it's not so liquid. Now M2 equal to M1 plus the short-term deposit. And again, this deposit are the same amount of money, the 9 trillion being printed, being used many times in the economy. So the total amount right now, based on World Bank report, IMF report, is about 140 trillion in the world. 140 trillion in the world. Okay, but again, these are the money that represent liquidity in the market. It doesn't mean the total asset value. The total asset value of the whole world global asset will be much, much, much higher than this amount, because asset is not considered liquid, so it's not included in M2. Okay, so these are considered liquid flow of money in addition to the printed notes and coin. So for M2, the total liquid asset is about 140 trillion. So now you can see it went up from M0 to M2 is about 14 times already. Now M3 including everything. So the long-term deposit, some deposit you put 1 year, some you put 2 years. They measure M3, meaning M2 plus all the above, is about 150 trillion so far. Okay. Now this is the snapshot of the global monetary overview. So I hope with this video you have the understanding who produced the physical notes and cash, which is the government through the Ministry of Finance. After that, the physical cash will be put into central bank, and then the central bank will put this money into commercial bank through many, many methods. And then the commercial bank is the one that keep using the money again and again and again, like a water plant, keep filtering the water and keep putting back into the economy. Okay, so I hope everybody can benefit from my video and you have a very good understanding how money is being created and being used in the economy, and what are the factors that will affect them, influence their decision, and what is the very simple formula used by economy to calculate the spending habit of communities in a country that will decide how many times the money will be used in the economy. So again, if you think my video is very useful, kindly subscribe, help me so that I can produce more wonderful video. Thank you very much. Thank you for your watching, and please circulate my video to your friend and ask them to subscribe as well. Thank you. Bye bye.